Good evening. Today is 11th January, Monday 2021. I am Sudarshan Sukhani, and this periodic video log is to discuss trading strategies for short-term traders, intraday and swing traders, focusing on the Nifty and the Bank Nifty. I say periodic because unfortunately I have not been putting these videos every day. I do want to do it, but somehow I get lazy. I'm very sorry for that. The chart that you are seeing on your screen is the Nifty 30-minute chart. I use 30 minutes even for intraday trading because the themes that I implement are easily implemented using the 30-minute chart, so I don't usually go to 5 minutes, very rarely, and that also sometimes only for options. Now this chart today gives you a classic example of what an opening range breakout is and why it succeeds and why sometimes it results in a failure. A failure means a trading failure. The breakout itself is never a success or a failure. The results of that breakout are successful and sometimes a failure. So let me give you the successful examples first. Let's look at this. I hope you can see the mouse in the middle of the chart. And now this is the first 15 minutes. This is a 30-minute chart, but since we timed the chart from 9 a.m. to 9:30, essentially this is the first 15 minutes of trading that we are now seeing here. This. Now we have a high of the first 15 minutes and a low of the first 15 minutes, and the trade is, if the high is broken, the market is probably telling us it's willing to go higher. If the low is broken, the market is willing to go lower. Now see, there is a big gap up. This is the earlier day's close and this is the open of the next day. Big gap up. We all expect the markets to keep going up, but what happens? This is the low. In the next bar between 9:30 and 10, the market breaks this low, telling us that it's willing to go lower. Now if we go short here, what is our stop? This is our stop. We must understand this. Throughout the day, the market goes in a trading range, but does not even come in the middle of this range. And the middle has no sanctity as such. It just tells us that the momentum is weak for the day. That's all. Eventually, there is a very sharp decline. And how much is that decline? This is 14,200 and this is 14,040. So there was a decline from this low of 160 points. Now nobody would actually get the 160 points, but whatever you got would have been very, very attractive. So this is the opening range breakout which works in your favor. Let's take the next day. The next day the markets opened with an enormous gap. Look, this is where it closed, this is where it opened. Very large gap. But let's see what happened during the day. This is the high of the first 15 minutes. And this is the low of the first 15 minutes. Again, the next half an hour, the market actually broke the low. And then it closed at the lows of the day. Throughout the day, it was drifting down. So if you had taken the opening range breakout trade, this would be profitable and this would be profitable. And now we come to Friday. Friday was another, what we do then is, this is the low of the first 15 minutes. And this is the high of the first 15 minutes. Now the next bar was an inside bar. Actually, intraday inside bars have no meaning, but primarily it means that it did not break the low, it did not break the high. Then it broke the high here. And after it broke the high, it never came below this high, first 15 minutes high. This became support repeatedly, and the Nifty finally rallied from this point to this point, which means it broke the high somewhere around 260 and it rallied all the way up to 367, 100-point rally. Again, you would not actually quite catch 100 points, but you would catch enough to make a handsome profit. Now, it so happened that back to back 1, 2 and 3, there were 3 successive days. Now, what happened today? That's what I'm telling you, that nothing works as a guarantee. It's not supposed to. All right, here we go again. This is the low of the first 15 minutes and the high of the first 15 minutes, and in the next half an hour the market broke on the upside. Wow, everyone is thinking, including me, that this is it, we are going to go to a big rally today. And what happened? The next bar there was a large slide, it broke the lows. This is a choppy market, or this is a whipsaw. Don't think that every day will be like this or like this or like this. Some days will be like this, which is where your own skills come into the picture, your own money management comes, your risk management comes, your perception of what the market view is, that comes in the picture. That is, and your willingness to take losses. There was no way you could protect yourself. You had to get out here, which means you bought here and sold here and you took a loss, and that's all there is to it. End of. Now whether you take a new trade or not is a different story, but there was a trade and it did not result in a profit. But all in all, if you use context together with this principle, it's a money making strategy. If you use it blind, it won't make money. But if you use some context, is this a time to go short? Is the gap up there which justifies going short? Is a gap up there which tells us it's going? Some days will still be losers. Let them be. But all in all, it would be a profitable strategy, and it is. Well, this is the idea of the opening range breakout with some live concrete examples. I have no idea what markets will do tomorrow, and by this time I'm sure you will slowly understand that you must develop your own perception of what markets can do. The trend is up, the moving averages are up, the trade is still, look at this is the short moving average and the long moving average. The trade is still to buy on dips, so that's usually what we want to do, go with the trend. Meanwhile, I hope you enjoyed this introduction to opening range breakouts. Enjoy yourself. Jai Hind.